So this next section, we're going to be talking about financials. For those of us that like numbers and like how they work, this section will be pretty easy. But for those of us that don't like numbers, this will be a little more challenging. This is, in my experience, has always been the section where most people that have any apprehension about starting their own business, this is the one, because they just don't know how it works out. So at this point, I'm going to welcome Karen Larsen. Karen's going to talk to us a little bit about the numbers. She's an accountant. She does numbers very well. She's really good at helping us understand what the numbers mean to us. So Karen, welcome.
Thank you, Kurt. We'll be covering several things in this segment. The first item will be creating and using a cash flow analysis. Next, we'll briefly touch on some of the basic monthly financial reports. And lastly, will be the personal financial statement, which is often required by lenders.
So what are the benefits of a cash flow, and why do we need to have one?
Well, building a cash flow analysis will help you determine if your business idea will generate enough cash to be able to cover expenses and debt payments. You will want to build your cash flow and income statement analysis on a month-to-month basis for a 2-year period of time. When you're creating your cash flow analysis, use your best estimates of anticipated revenue and expenses. Be sure and be realistic and somewhat conservative when you're estimating your revenue and expenses. Once you have your cash flow analysis built, you can create several versions of the analysis if you would like to analyze a variety of sales and expense options.
So what information does a person need to have available to actually make the cash flow work?
The information you will need to create a cash flow statement are the expected sales and revenue, cost of goods sold, expenses, debt payments that will need to be made, any owner's draw that you think you would be taking from the profits, and anticipated capital purchases you are planning to make.
So explain to me how to start building a cash flow.
The first section you will be completing of the cash flow is the cash receipts or sales section. You will want to break this down between the merchandise you sell versus any services you may provide. It could also be several different services that you will provide that are different enough from each other that it makes sense to look at them separately. When you are estimating your revenue, take into consideration the seasonal cycles of your product or service, and be sure to use realistic estimates of monthly income and growth. Once you have your sales section completed, you can calculate your cost of goods sold. Cost of goods sold are your expenses directly related to the production or delivery of your product. These include materials, packaging, shipping, and labor. Cost of goods sold is usually calculated based on a percentage of the sales. It is important to have cost of goods sold lines that match your sales lines or descriptions. The percentage for cost of goods sold can vary quite a bit for different products or services. An example of this would be an auto sales and repair shop. You may purchase a car for resale at $650 and sell it for $1,000. In this situation, your cost of goods sold percentage is 65%. You may also repair cars. The parts used and sold repairing the vehicles may only cost 30% of your selling price, and your labor would be straight income.
So where do the expenses that aren't part of the cost of goods sold go?
The next section of the cash flow analysis are these expenses. They are your fixed expenses and include things like payroll, advertising, office supplies, rent, utilities, and travel.
So Karen, what else is needed to complete a cash flow?
The last section of the cash flow analysis is the other cash reductions. This will include cash payments you would be making for loan and debt payments, any capital purchases such as machinery, equipment you might plan on making, and any owner's draw that you would want to take. Once you have this last piece of information entered into your cash flow analysis, it is complete. You can then use the report to determine if your business will have the cash flow necessary to cover expenses, debt, and any profits you hope to use as personal income. Once you analyze the results of your cash flow, you can determine if there are adjustments you could make to your sales or expenses that might help you get the results you're hoping for. I would suggest even saving several different scenarios of the cash flow with some of the different options you are thinking of. The results of this analysis may also show you that even though your idea is interesting, exciting, and even in demand, it may not be able to provide you with the cash flow or income you need to meet your personal and financial goals.
Well, that's a really good point. In my experience, one of the things that's happened with some of the clients that I've worked with in the past is, they've got a great idea, they've got something that really seems to be something that could work, but when they put it on paper, the numbers just don't work out. Two things happen. Sometimes they actually will just say, you know what, this does not work. And other times, people are so committed to this idea, and they just believe in it so strongly that they'll just keep working those numbers, and they'll try to make something happen that really can't happen. Is that the right thing to do, Karen?
You know, in my opinion, you need to be really realistic about it and just decide that this will or won't do what you need.
But the proof is always in the numbers, correct?
Correct.
So if it's not going to work if it's not going to work from the numbers, it's probably not going to work.
Yes, I would agree.
So Karen, what are some other types of reports that we can use to help run our business effectively?
Two of the basic and standard financial statements a business should do on a monthly basis are a profit and loss or income statement and a balance sheet. This will tell you if your business is making or losing money and where the business stands at that given time financially.
So Karen, are there any other types of reports or financial statements that will be required by my lenders?
Often lenders will require a personal financial statement. This is a personal balance sheet that shows your assets, debt, and net worth. Along with this personal financial statement, they will often require the cash flow analysis, a sources and uses statement, current financial statements of the business if the business is already in existence.
So thanks, Karen. You've done a great job of breaking that down for us, and it's been a great help to us. So really what we've just accomplished is we've broken down that cash flow. We understand what goes into that cash flow, and that's really going to help us as we launch our business. How about the personal financial statement? How much stuff do I actually put into that?
You know, it's going to be your savings, your cash accounts, your property, any vehicles you own, any personal debt you have, credit card debt, vehicle debt, and the difference between those two will give you your net worth.
Great. What if there's some stuff in there that I don't want other people to see? Do I still have to show that?
Yes, you do.
Oh.
They're going to find it.
Great. Karen, thanks a lot. We really appreciate it.
Thank you.